Is Singapore property in a bubble? Are prices going to crash like in other countries? If you're thinking about upgrading or investing, this is probably a question that's holding you back. So now let's take a look at some facts. UBS has a global real estate bubble index. They look at factors like income, rent, GDP, and housing prices to assess whether a country's property market is in a bubble. When we look at the global ranking, cities like Tokyo, Sydney, and Hong Kong are high risk. As for Singapore, on the other hand, is rated only moderate risk. This shows that while many say Singapore property prices are a bubble waiting to burst, the data says otherwise. Our market is sustainable. Now, why is Singapore so resilient? A key turning point was in 2013 when the government introduced the total debt servicing ratio. Before TDSR, property buyers could easily over-leverage, and because of that, during economic crisis, many were forced to sell, causing the private property price index to dip sharply. After TDSR, people could only borrow within their income capacity. That's where property prices fell back in line with our GDP growth, preventing overheating. Since then, even with the global crisis, Singapore property prices have risen steadily and sustainably. Moreover, with Singapore home ownership at more than 90%, property is a need more than an investment. That results in a low percentage of people having fire sale or selling at a loss, because if they lose money, they would just continue staying in it. According to SingStat, since 2016, Singaporeans' total CPF savings outweigh household liabilities, add on cash savings, and most people can comfortably hold their properties even in downturns. This further emphasizes why Singapore property is resilient. So, is Singapore property in a bubble? The evidence says no. It's structured for long-term sustainability. If you want deeper, data-driven insights and to know where the opportunities are today, feel free to reach out to us. We will be in touch to guide you through.